The chart.
Yeah, welcome to the chat. So, as we all know, there is no best strategy, and every strategy, every technical analysis is nothing but opinions of experts or technical practitioners that they use as a tool to analyze the market. So, our focus here shall be swing points. As we know, technical analysis is the study of trends and reversal points. So now, what are swing points? What are swing high and lows, and how do we identify them? To spare us useful time, we are only going to be focusing on the most important swing points that the market generates. We are only going to be focusing on the best probability swing points that the market generates. And we are also going to learn how to identify irrelevant swing points that must be ignored at all times, as not all swing points are valid. Now we need to know this. Forex trading is a zero-sum game, and for some to make money, some have to lose money. So now, how does the market make this possible? The market makes this possible by inducing the concept of liquidity. Now we know that forex trading, you need to buy or sell to make money, and this is where the concept of liquidity comes in. We know that if the market is selling, then what does the market do? Then the market is going down. Like this area, for instance, where the cursor is, then the market is going down. Vice versa, if the market is buying, then what? Then the market is going up, just like this, where this cursor is going to. So from the point here where this market goes down, you can see this point here, and the market is going down. This is where liquidity comes in place. Let me mark the highest point. This point here, this is the high, and this is the low. In the field of technical analysis, this high you see right here and this low you see right here, they are swings, because market swings away from this high to this point and swings away from this low to this high. This is where the concept of liquidity comes in place. This swing right here is a liquidity zone. Mind you, I'm just using the concept swing. I'm not saying that this LD swing. I'm not saying that this LD swing. This is just a swing. So for us to understand very well, we need to pay attention to the words used. We need to pay attention to the concepts used. So focus more when I say a healthy swing point. Focus more when I say a healthy swing point, and also focus more when I say a trap swing point. I can bet you no tutorial in the market, no tutorial on YouTube, no tutorial in a paid mentorship is going to highlight these differences to you. It is a lesson you will learn the hard way by trading on your own. But for me, I have nothing to lose. The market pays me anyway. So sharing this knowledge takes nothing away from me. So now, immediately the institutions manipulate the market to create this swing high, they have already generated liquidity in this zone, as we have a lot of sellers in this zone. And for buyers to make money, they need people to sell to them. So just as market swings up from this swing low, they take out the liquidity in this zone? You need to know that institutional traders, the dominant market participants such as the central banks, hedge funds and large financial institutions, they push the market at their own will. They push the market at their own will, and they cannot scale in and scale out of the market just anyhow. So for them to scale in successfully and scale out successfully, they need to generate liquidity. They need to accumulate bulk of orders from the retail traders. So what do? Then they take the money away from the retail traders. That is why to be successful in the market, you need to think like the institutions and you need to act like them and ride on their coattail. Never go against them, because going against the institutions, I can assure you that you will always lose money. It is guaranteed, because they control the market. And as we know, in any field, to be successful, you need to copy the mode of operation of those that have been successful. And as we know, institutions over years, over centuries, they have been successful in this market. You can see the likes of the large investment banks such as Citadel, and the likes. So now, in generating liquidity, that is where the concept of swing points come into place. I guess as I have explained here, you should have known the essence why swings are generated in the market. Let us take another example. Right here, you can see this is a swing high here. This is a swing high here, and here we have a swing low. So let us dissect what happens right here and how the institutions manipulate these swings. You can see this swing high right here. So for the sake of clarity, we are only going to be identifying healthy swings as well as the traps. So when you get to the chart, you have a clearer view of the chart and you are not just left bamboozled by various patterns, because the market can generate unlimited patterns. So you just know the most useful patterns to focus on. Here we can see a swing high, and in my opinion, this is a healthy swing high. And what happens? Market prints a swing low, and in this swing low right here, you can see buyers in this zone. In this swing high right here, there are sellers in this zone. So now the buyers here are manipulated. So the sellers here, there's a retest of this other block. So the sellers here take their money away and the trend continues down. Right here you can see another swing low manipulating the market to the upside. And mind you, these swing lows, they are not healthy. This is not a healthy swing. This is not a healthy swing. But regardless either it is healthy or not, we have orders there. If there are no orders there, the markets wouldn't move anywhere. As we are always going to have impulsive traders in the market, it is non-negotiable, they will always be in the market. So now you can see what happens is retest this healthy swing here. This swing here is also a healthy swing. Let me mark it. So once you are able to identify healthy swings and swings that are not healthy, you will see the movement of the institutional traders, of the market makers easily. It retests the king order block of this healthy zone. This is a king order block. If you go to a lower time frame, you are going to have a strong order block here. So you can see we have buyers in this zone, and this is just merely a correction. It retests the king order block of this healthy swing and the market continues to drive down. So it is not complicated. It is very 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 easy. It is very very easy. So once let us go to a lower time frame to just see this king order block here. This is just an extra information. Extra knowledge does no harm to the mind. So as we have said earlier, swing points are used as baits by the institutions to generate liquidity, and swing points can also be used as areas of entries as well as exit depending on your technical prowess. So now let us go to a lower time frame to look at this king order block. Okay, which I didn't check the time. I just want us to see the king order block that particular distance retested from, because I did not check the time. I did not check the particular date. That's what I'm trying to check again. So as you can see the chart, there are numerous patterns and the chart is going to try to deceive the mind to either take all these patterns as zones where the market will either buy or sell, and in reality not all these zones are valid. Oh, unfortunately I can't even see the zone where we marked to highlight the king order block. And I would love us to see the reaction of price at that zone. And you need to keep something in mind. The market prints out each and every candle with a clear purpose. There is no candle that forms in this market out of luck or out of sheer just happening. The market maker has a clear purpose of creating every candlestick you see on the chart. He either uses them to accumulate, he either uses them to manipulate, or either uses them to distribute in his intended direction. Since we can't see that king order block, let us ignore that and we can look for another king order block. Let us check a king order block that is closer. Right here we have one. Let us go to the lower time frame. Which date is this? April 9. I should have checked the date on that one. Yeah, let us go to April 9. So king order block, fair value gaps on the lower time frame. Most times you are going to have a strong order block here on 15 minutes. Not much of a strong order block. Let's go to April 9. Not that we are deviating from our point of discussion here, as we are still going to get back to the swing points and how to identify LD swing points and swing points that are not LD that must be ignored at all times. And these swing points that are not LD that must be ignored, you can always mark them as liquidity zones. So right here we can see a strong pattern at the king order block where price rejects from. This is it on the 5-minute time frame. You can see this strong pattern. Here we have the buyers, here we have the sellers, momentum shifting to them. We have the sellers here, momentum shifting to them further. So you can see that's the exact place that the price draws to on the 5 minutes. This zone here, you can see it here as well. And once you go to the 4 hours, it is a king order block. So on a lower time frame, the king order block, you have a strong order block there, and price comes to this zone, activates more orders and drops. Let's get back to our business. So this is it here that I want to show you on the lower time frame. You can see that there's a strong pattern there. So now let us learn the swing points that we need to identify and the swing points that we need to ignore. A healthy swing point consists of 3 candles, and we can see an example here for us to know that the swing point is going to hold. The first, if it is going to be a swing low, we are going to have a sell candle comprising of sellers, and the second, we are going to have a buy candle comprising of buyers. This buy candle totally embodies the sell candle, and thirdly, we are going to have either a buy candle or a sell candle that closes within the range and above of this bullish candle. Then it signifies that this is a swing point, a healthy swing point that is most likely going to hold price. And you can see what happens. Price continues to go up. And right here we have a healthy swing high here, which is just an inverse variation of the healthy swing low. First, we have a bullish candle, and second, we have a bearish candle that embodies and engulfs the bullish candle, and another candle that is either bullish or bearish that closes within the range and below of this candle. Then price continues to go down. So this is also a healthy swing point. This is the first variation of a healthy swing point. And the second variation of a healthy swing point, we also have 3 candles if it is a swing high. The first is a bullish candle, and the second is a bearish candle, and the third is a bearish candle that also closes below this bearish candle. Then we expect price to go down. So these are the healthy swing points you need to pay attention to, not the unhealthy ones. Here we have the first variation of a healthy swing high, another variation of a healthy swing low, and here we have the second variation of a healthy swing high. And let us look at a variation of a healthy swing low. And right here we have a variation of a healthy swing low. Even if you pay thousands of dollars in mentorship, they won't teach you this, unfortunately. Here we have a bearish candle, here we have a bullish candle, another bullish candle that breaks this bearish candle, and we expect price to swing from this zone. So here it is. So those are the variations of the healthy swing points you need to pay attention to. And ideally, most likely a swing point that holds, it grabs liquidity. That is either the high or low of the previous day, another swing point, or the high or low of a previous month. Do the needful to watch the videos on liquidity and trap zones. So you can see the swing point here, it's grab liquidity, then price drops. The one here as well is grabs liquidity of this swing point. If a healthy swing point is going to grab the liquidity of another swing, the other swing could be unhealthy, but I hope you already know how to recognize the swing, the healthy and the unhealthy one. You can see this also grabs this swing point and price drops. So let us have as much examples as we can before we conclude. Here is another variation of a swing low. And identifying these swings in a structured manner, you can see that it will be very easy for you to identify on the chart. Nothing complicated. Here we have a bearish candle, here we have a bullish candle, here we have another bullish candle, and price swings away from this zone. So you can see the market maker is going to play as many tricks as he can, but yours is just to understand how and when he plays these tricks so you don't fall victim for his ploy. And here you can see this liquidity zone is grabbed and price goes up. You can see this is a healthy swing. Unlike we focusing on this swing here, you can see this is an unhealthy swing that doesn't hold. You can see. So just because price is attempting to reverse from one zone, so most of the time if you fall for the unhealthy swings, your stops is going to be are going to be massively stopped out, because it is unstructured and you are even going to overtrade. This is an unhealthy swing. So just be patient, ignore the unhealthy swing, focus on healthy swings. Even if you understand trading to a level, it will be very easy for you to incorporate swings into your strategy successfully. Here we have another healthy swing, a healthy swing low. As we have learned, there are two variations. Here we have a bearish candle, here we have a bullish candle, another bullish candle, and this is a good healthy swing. And what happens? The market travels away from this zone. Here you can see it. This is a healthy swing. So whenever you see the healthy swing, you can see this one is not healthy because the market does not close down. This candle here does not close down, so it's not healthy. So as we know, a healthy swing is made up of three candles and there are rules to it. And we have highlighted the rules. You can see this is a healthy swing, although preferably the third candle should also close below this candle. Not all the time, but preferably, as I said, preferably. You can see this is a bullish candle, this is a bearish candle, and this can could either be bullish or bearish, but preferably it should close below or spike below this. But even though it doesn't, price still moves down. So the most important thing you can do, what makes this our lesson useful is if after this you take great action, you go and mark the chart yourself, you go and train your eyes to spot the healthy swings and unhealthy swings. That is the most wise decision you can make, not just watching this video and from there thinking you have known it all. Go train yourself. Here we can see a healthy swing point also grab the liquidity zone. Here we have a bearish candle, we have a bullish candle, and that bullish candle that closes above, and you can see price rises up. So on your own do the needful, train your eyes, know how to recognize healthy and unhealthy swing points. I've already told us the reasons why the market generates swing points: to induce traders, to manipulate traders, and take money away from retail traders. So here is a healthy swing low, and in forex trading it is better to know what to ignore than what to do, because what to ignore is more than what you have to do. So here is a healthy swing point, 1 2 3. I can see price swings away. So there is nothing complicated about this. Looks like a healthy swing point, but I do not take this as a healthy swing point because it takes 4 candles, 1 2 3 4. So those are the variations you will see when you are trying to train your eyes. This is a unhealthy swing point here. So just because price swings away from one zone, it doesn't make it healthy. It needs to have a formation, it has characteristics, it has unique features that we have learned and highlighted. This is an unhealthy swing point. So we have taken examples of healthy and unhealthy swing points. So I see no reason for you to fail again in this market. This is an unhealthy swing point. Right here we have a healthy swing point. This is a healthy swing point. Let's go to another pair. No USD. Right here we have a healthy swing point. So all this I wasn't just taught, I learned on my own. I trained my eyes. I tried my best to be in symphony with the market. This is a healthy swing point. And most of the time when you backtest and check the chart on your own, you will see how price react at these zones where they are healthy swing points, grabbing liquidity and moving on. And the unhealthy swing point, most of the times you will see how price would always spike those zones. Unhealthy swing points will never hold. In fact, whenever they hold, it's just a trap reinforcing bad technical analysis from traders and inconsistent habits. So check the unhealthy swing points. Most of the times they will not hold. More often than not, they wouldn't hold. This is the unhealthy swing point. You can see it wouldn't hold. I'm doing this because if I had the opportunity to learn this decades back when I started trading, it would have saved me a lot of time. It would have saved me a lot of energy. It would have saved me a lot of money. But the deal has been done, so I can save others as well. That is why I'm doing this. You can see this is a healthy swing point. So you have no reason to overcomplicate whatever it is in the market. Just know what you are doing. This is a healthy swing point. Mark out healthy and unhealthy swing points till the time when you are successfully able to ignore swing points that are unhealthy. So let us have as much example as we can. This is a healthy swing point. So when they say swing high and low, you don't just fall for any swing high and low. As you know, everything in this life, we have original and we have counterfeit. So these are the original swing points you should look out for. Ignore the counterfeit. The market maker is always there to get retail traders, so understanding his game puts the retail trader in a better position to win, just like the market maker. Here is a healthy swing point. So what we have learned here is how to identify swing points and how they are used by the market maker. Plan your trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, share, subscribe, and follow for more.